Hello, my loves. Today I am with Miss Gloria Leonard with Align Mortgage.
Hello.
And we wanted just to chat with you about the steps that you should take in preparation to buy a home and some cool products that Align has.
Yeah, of course.
How are you doing today, my love?
Well, I'm doing well. I'm so happy to be with you, Maggie, and thank you for doing this video with me.
Absolutely. It's my pleasure. You have such great social media presence and content, and every time you come in and talk to the team, I always feel like I learn so much. So it's my pleasure. I'm glad you're here with me.
Thank you.
So let's just jump into it. What are you seeing in the mortgage industry right now? What are some of the challenges that you're facing in this particular market versus previous markets?
Well, definitely, the interest rates scares everybody, because and of course the pricing in the homes has been a little way higher than it was before.
Mm-hmm.
So, and the salaries, that's not increased so much. So of course it's a little more difficult to buy now than it was some years ago. The interest rates obviously will be plays a very crucial part into this. So, the mortgage payments every month are higher than it was.
Yeah, because the interest rates affect
right.
it.
So that part is like the question they always ask is how will be my mortgage payment if I'm gonna pay this much here and there. So when we give the numbers, they get a little scared, But if you compare that versus a rental, the rents will be always increasing every year normally, and a mortgage gonna stay the same way. So we need to compare. Maybe you're gonna pay less now, but in some years you're gonna be paying more than with the mortgage.
Well, and essentially when you have a home and you have a mortgage, you're really just paying yourself, because once you pay the mortgage off, you have an asset that has gained equity versus renting. It might be a couple $100 less or maybe, more, but you're paying someone else's investment. Exactly. You're walking away with nothing. And, I find people fret over like $400 to $500. And if you really break down $400 or $500 in a per diem, that's like maybe you cook at home a little bit more. Maybe you brew your own coffee instead of Starbucks. That little sacrifice really changes your financial stability long term.
Right, exactly. So it's something that we need to encourage people to see what is the difference if I take the step now or if I take the step later. Everybody is like, why I didn't do it before? And they were scared before as well. So it's like you have to pass the fear now, and what you're going to find after the fear, when you cross the fear, is success.
So I agree, like fear does hold people back. I tell people all the time, the anxiety is more leading up to the conversation and putting in the application than the reality of what it is to go through the loan process. Of course, there's going to be things and steps, but I think more the fear is not the $500 or $400. A lot of times the fear is like, am I even going to qualify? What can I get with that? What happens if XYZ? Just do it.
Yeah.
It's like, if you're going to cold plunge, if you tiptoe into it, it hurts. If you just jump in that cold plunge, it's a little bit of shock, but then you're good to go, and there's benefit.
Yeah, and the important thing is like you need to find the person that guides you. We, as mortgage lenders, we want the best for you. We want the best deal. We look for the best deal. As brokers, we look which bank is giving the best for you, the best price, the best rate. Yeah. So
I'm going to stop you because a lot of times people don't understand the difference between just like a lender with a bank or a mortgage broker. So the difference is, if you go to, I'm not going to name a bank, but if you go to a bank, they have the products that they have. Right. Versus you as a broker, you can really shop anything that's out there. And your job is to get their information and decide, okay, here are the options you have. These are the different options. sort of like you and I, we were talking before we started recording about zero down payment.
Right.
And some people love the idea, like, oh my gosh, zero down payment. Some people really need that. I'd rather you get in with zero down payment, but there's always going to be a catch. Your interest rate's going to be a little higher, right?
Yeah.
But I'd rather have a zero down payment and a low interest rate and live in that house and gain equity.
Right.
And then when it has equity, refinance, if the interest rates are lower,
right.
But at least I have my house and I've been gaining equity in the meantime.
Exactly. So coming back to the broker versus banks, part of it is, yes, we do see and we have access to multiple banks. And then from there, what they have to offer with the scenario our client is having. And depending on this scenario, his situation, his circumstances, the money that they have, how they prepare the taxes, there are W-2s, there are different things.
Or 1099.
And then 1099s or bank statement, they didn't do the taxes correct, so we need to go to the root as a bank statement loan or profit and loss, etc. So which bank has all these products? So we see, okay, this bank has all these products. Which one is offering the best price? Which one is offering the best rate? And then we put the client there. Yeah. Plus, we do have some advantages on managing. We probably can even give lender credits to help them with closing costs. So that's the advantage of a broker than a bank. A bank is limited. I'm not saying it's bad or anything.
It's just a different experience.
It's different. Yeah, and we can actually be able to provide different pricing. And that's something that is I mean, that's why I want to work with a broker, you know, because I can offer the best for my clients and the best for my realtors as well.
And I think another thing is that the communication is there. You definitely don't have bank hours. Like, as a realtor, that's so important to me because, you know, a lot of our business is on the weekend. And so if you work Monday through Friday and I need something Sunday at noon,
I will jump and put my computer here and
get it done.
Get it done.
I love it. You're so good about that. Another thing that I really appreciate about you and why I wanted you to come in is that, like you were saying, it's you can break it all down and show them like their options. So what a lot of people don't understand is, like earlier we hit on like the 0% down payment, but you know, a lot of people currently are doing like buy downs and just different creative financing arms, stuff like that. So I love that you brought that up because really it's not like people get online and they'll be like, okay, this is what I can afford. This is the rate. You just see a snapshot. You don't realize there's actually a ton of products that can make that look very differently.
Right.
And so I appreciate that y'all do that and you break it down and then it's kind of like, okay, what options you want to do a larger down payment, this, and if you put this down payment, this is the only different, you know, so I love that. Another really creative thing that Align is doing right now and that you're offering, and it's really what sparked my interest in having you come in, is the new buy before you sell. It's similar to what we've heard of in the past, and maybe some places are still offering the bridge loan. We haven't really seen that in some years be popular because the market was going so fast. But as, again, a realtor and a broker, I'm seeing a lot of home sale contingencies now because houses are sitting on the market.
Right.
And again, this is nothing new to me because I've been in the business so long. This is, you know, maybe for people that have been in business the last 3 or 4 years, this is new, but we navigate that a lot.
Right.
And sometimes it's a little harder to get those offers through, but you have a great product that I would love for you to tell us about.
So buy before you sell is 2 different companies working together. So one do the equity unlocked, that is given in 24 hours.
And what is that one more time?
The equity unlocked.
The equity unlocked.
Yes. Did I say it with an accent?
Just a little bit, but I love your accent. You can tell me the world was in and I would be like this. Yes, girl. Whatever.
Equity unlocked.
Equity unlocked.
Yeah, so they take part of your equity, and they borrow 75% of it.
Okay.
So why I say part of your equity, because they will do an assessment. It's not like an appraisal. So an assessment is just like a general price that this bank gonna say, okay, this house is 500, but we're gonna assess it as 450, and then they pay the mortgage out of this 450, and then they borrow 75% of it.
Okay.
Yeah, which is many times good enough to put towards a down payment, moving costs, closing costs, etc. So
so you can use this for that's really cool.
Right. It's not necessary for the down payment only. Okay. It's like money you have available for all your expenses.
Okay.
Yeah. They even can keep a little bit if they want. Oh. Yeah. So to buy furniture or whatever it is.
Or maybe sometimes at closing you have to pay things off at closing.
Exactly.
Having that additional buffer money is nice.
Exactly. So I need to pay this credit card to be able to qualify.
I might do it and come back with a brand new face.
Well, I don't know.
That's not what the money's for.
Good point. I will do it.
She's like, we are all about
I'm gonna buy a purse. I'm obsessed with purses. Okay,
so basically they assess the value of the house. It's probably not going to be like the fair market value or appraisal. They're just going to allot a price of the house, and whatever that is, they will go ahead and loan you up to 75% of that,
right.
And you can use that towards not a facelift, like I was saying, but but towards like down payment or whatever they need in the interim.
Right. So yeah. So and that is a quick part. So they just do the equity and loan. They give a offer. Okay, we're gonna unlock $150,000 example, and then they can add then the second part. So the second bank will do the conventional loan. So they need to qualify for a conventional loan as a normal process of any loan. Yeah. So to not be confusing.
So what she's saying is for this particular product, you have to qualify for a conventional loan. So FHA is a government-backed loan, or VA, you have to have VA benefit. Yeah. Those wouldn't qualify. You have to qualify conventionally.
For conventional. So, yeah, I mean, normally conventional is the most common type of loan that everybody use.
Yeah.
FHA won't be a law on this in this scenario, but it's not actually necessary because you will have enough down payment for that. So,
and for the people who don't know, a lot of times people go FHA because they like the lower down payment, which is 3.5%. 3.5%. So a lot of times, like first-time home buyers, people who aren't rolling equity over, or like say it's a situation where you got divorced and you're each buying your own houses and you don't just have that big down payment for the house. People typically will go FHA because it's a 3.5%. But because you have this buy before you sell and this additional funding, more than likely, as long as your credit score is where it's supposed to be, you don't have to worry about the down payment.
So FHA has a 3.5% down payment. Conventional has 3% down payment. Not necessarily has to be higher than that. It is with 3%. They still have to pay mortgage insurance. If they pay 20%,
then there's no PMI.
Then there is no PMI. So the difference when you put a lot of down payment is you already reach out the 20% down payment, so you are not paying mortgage insurance. So that is the difference between FHA, that you're always going to have to pay the mortgage insurance.
And so you refinance
at the end of the day, the monthly payment will be exactly or even less than FHA.
Okay, that makes sense.
Yeah, because you're not paying that mortgage insurance. So going conventional is pretty good. It's a good thing. So then when you get approved for conventional loan, we go through the normal process of getting the documents together, etc., until we to completely approve you. You go to the closing table, and then you get that money from the buy before you sell program at the closing. So you get that money there. And if there is any money left that you want to use for your face in your face that you don't need, by the way, then you can get this money.
That's smart, because I'm sure other people were like, wow, let me get this money and I can go on this fabulous vacation, and then they can't close their loan. So that is smart.
Right.
So any
It needs to be at
additional,
closing.
any additional will come at the closing. So
Yeah, exactly. Something important.
Mhm.
So before you sell, so
Mhm.
you have to sell the home
Mhm.
afterwards.
Oh, absolutely.
So you can list your home to sell it prior all this process,
Mhm.
but the latest will be 10 business days. So you have 10 days to list your home after you close, So
Okay, so
you will empty your house, you're
Mhm.
gonna move, you have your new home now. Now you're getting ready to sell your home.
Okay.
Empty, beautiful, you get it listed perfectly. So you will be able to sell your home easier because it's empty.
Yeah. And then too, like with Align and then Method, you could use the Method Makeover program and have it,
We got it.
we got you.
We got it
all.
all.
We got it all. We can get you some money, and then we can
exactly.
use Method Makeover and get your house together, and it can be empty of your stuff, and we can have it staged. So it's a good
with the marketing,
Mhm.
etc. And then, of course, you're gonna sell this home very quick.
Oh, absolutely.
Yeah. And then when you sell the home, you pay the debt of this equity unlocked,
Mm-hmm.
right? And you're free. You're good to go. You sold your home. The money, of course, we gave you only $450.
Mm-hmm.
The house was sold for $530.
Mhm.
So of course you're gonna have money left. If you want to take this money and pay more towards your mortgage to the principal, you can.
Okay.
So your monthly payment can be even lower. So I love this program.
I think it's going to be so beneficial going into this new market, this market that we're shifting into. It would have been beneficial in our previous market. I hadn't heard of this product until the other day, and you were talking about it, and I was like, that's awesome. Because again, like here at Method, we definitely try to do full service, right? That's why we have the Method Makeover program. And Align is the same way. It's like everything is full service. Like, what do you need? Let me figure out what you need, what's going to work best for you, and let's get it done. So you and I also were chatting a little bit before we started today about being prepared, right? A lot of times people don't want to reach out to a lender because of the fear, and they want to wait until they find that house to talk to a lender. Some of the rebuttal I get when I'm like, have you talked to a lender yet? Do you have your pre-approval yet? Is that, well, we're waiting, we're this amount of time out, or, I just don't want my credit pulled. I don't want to pull it down, or all sorts of excuses.
Right.
And really what it is fear and anxiety. And I always encourage my clients, because I'm not an expert at lending. You don't want me to do your loan. I can sell you a house. I can market the hell out of it. But that's not my wheelhouse. I know enough. So I always encourage my clients to go ahead and reach out to a lender, because we sometimes think we know what's best in like improving our credit score, what's going to set us up to be properly prepared to buy a house. And oftentimes we're wrong.
Right.
So tell me some of the things that you feel people need to do in preparation to get a home.
Yeah. So for self-employment, let's start from that. Self-employments normally do their taxes. However, the accountants say this is how you're going to save more money, this is how you should do your taxes, etc. But if you are planning to buy your home in the upcoming years, then definitely you need to talk to a lender, because there are different ways to explain what you are paying in a different way. So there are situations where you put miles 1 year, and then the other year you put 0 miles. That affects your income.
I've had that happen with one of my agents.
Yeah.
They're like, how did they drive this many miles this year and then this many? Yeah.
Because the accountant told them, let's don't put miles here, or let's do more miles here. Sorry. So that's one situation. Another situation is they don't put enough miles. Actually, they never put any miles when they can. Yeah. And miles actually are good for mortgages, because we can add these to the income and they don't pay that to the IRS. You can add depreciation when you have anything that can get old, in construction or anything that can depreciate, you can put it there. And I can, let's say you depreciate $30,000. I can add this $30,000 to the income, and you're not paying depreciation to the IRS. So there are different ways to show more income, and not necessarily you're gonna pay all this amount to the IRS. Yeah.
And I think another thing that people don't realize is that, because I've run into it so many times with people who are self-employed, is that they'll be like, what do you mean I can't qualify for this house? I make $500,000 a year. And I have to be like, well, you wrote off $450,000.
Exactly.
So it looks like you made $50,000. So again, people sometimes, part of their anxieties or whatever, they'll say, oh, I'm not looking for a couple of years. Well, even if you're looking in a couple of years, especially if you're self-employed, go ahead and talk to a lender. That way you know what to do in preparation, because it's a lot easier if you know ahead of time and prepare versus trying to work backwards. I think, and the main thing is just talk to your lender. Everybody's situation is different. Mm-hmm. It might be something like where you get a big gift of money, right? Someone's going to help you with your down payment. You're going to have to show where that comes from. So you need to have very open conversations with your lender,
right? And
don't wait until you find that house. Have a lender, just like a banker or an advisor, and it doesn't cost you anything until you close, and then the fees are in your closing. So you have access to the expert. And again, the beautiful thing about Gloria is, okay, maybe you don't qualify today for what you want, but let's set you up for success in the future. And that way, when the time comes, it's a lot easier because you're prepared.
Right.
So yeah, I think the biggest takeaway from this is to just talk to your lender, right?
Yeah.
And I mean, you couldn't have a better one with Miss Gloria.
Oh, thank you.
And a line.
Yeah.
So thank you so much, my love. I really appreciate you taking time out of your busy schedule to come and chat with me.
Absolutely, absolutely. This is part of my job to educate people, to help the realtors, to understand better what the products out there, etc. So yeah, definitely call me. Let me know, everybody, about any financial needs, mortgage questions, etc. that you all have. I'll be happy to answer everything.
I love it.
Yeah.
And also, one last thing, you should always, even if you're working with a lender currently, it never hurts to have a second opinion.
Yeah.
So even if you are locked in, give Miss Gloria a call.
Maybe
Let's see what we can do.
You can save some money.
Save some money or give you different options.
Yeah.
Well, thank you again for coming. Guys, thank you for tuning in. And I hope you guys have a blessed day.
Okay, bye-bye.
Bye.